maybe Elon Musk trying to move some vehicles ahead of that Q1 close. Of course, this comes at a time we know when Tesla's competitors, U.S. and China, have been cutting prices, which is interesting.
And for what it's worth, I actually leased the Model Y last week.
It's one of the worst quarters that's expected from Tesla in quite a long period of time.
All that and more. So let's get to it. Tesla stock is down in the pre-market almost 1.5%, sitting at $172.82 per share. The week and the quarter has just started, and everybody's eyes are focused on Tesla's production and delivery numbers. At least until we get closer to the earnings report, where everyone's focus will be on the margins. Year to date, Tesla down over 30%, and I see this trend continuing because Wall Street just doesn't understand what Tesla has going on. If they did, they would understand that Tsla is on the precipice of a huge growth in revenue. Yes, indeed, ladies and gentlemen, I'm talking about FSD, not beta, but supervised. And many might say this is semantics, but I look at it as a video game going from the closed beta to the open beta. Instead of calling it open beta, they chose to go with something a little more civilized and say supervised. Either way, you can expect to see more of an adoption rate of this software. $12,000 per vehicle or $200 per month per subscription. Roughly 3 million vehicles in North America. You do the math.
Let's start with Tesla here. Shares riding lower as it raises prices on all Model Y vehicles. So in the U.S., prices go higher on its popular Model Y SUV by about $1,000. Did the same in China with the Model Y long-range version. Price hikes not a surprise, Julie. These were telegraphed, so we knew this was coming. Maybe Elon Musk trying to move some vehicles ahead of that Q1 close. Of course, this comes at a time we know when Tesla's competitors, U.S. and China, have been cutting prices, which is interesting.
I wonder if that was an effective ploy to move product at the end of the quarter. Regardless, Tesla said they aren't going to be growing as much as they did back in 2023. While growth is still growth, there's going to be less new vehicles for people to purchase. This inevitably will make prices go higher, at least in the short term.
And these price hikes are not very large, right? They're just around $1,000. The other thing that really people are watching for Tesla right now is finding out the deliveries for the first quarter. That's what everybody wants to know. What do the numbers look like? Especially at a time when Tesla's already not performing very well. We just talked to Lou Bassinis a few moments ago. He said he would not touch Tesla at these levels because it is in this sort of in-between time, and he doesn't see what the next catalyst is going to be.
He doesn't? Seems kind of obvious to me.
You know, like you said, that those price hikes were not unexpected. They were going to happen. Tesla's U.S. website had these, it'll go up by $1,000 at the start of the month because, as you know, they wanted to push those late quarter sales. But
it's amazing the narrative that comes out of the financial news media. It has to be a ploy for them to try to get more sales for their vehicle. This is the best-selling vehicle on the planet. What do you mean drum up more angst? There should be plenty of angst in the market right now. Tesla's not going to be producing as many vehicles? Oh man, maybe I should get my vehicle now before wait times blow out.
The average analyst estimate is that in the first quarter, they delivered 453,964 vehicles. That would mean sequentially quarter on quarter, a sales or delivery decline. But the key metric to look is against the same period a year ago where they delivered around 422,000 odd.
Imagine Tesla hitting 52-week lows because the estimates that the Wall Street analysts have don't match what Tesla is producing right now. I kind of want these numbers to come in really, really low, just to take advantage of the buying opportunity.
We know the story in the quarter gone. Difficulty with high rates putting off the consumer, a broader global EV growth slowdown, and then they had supply problems, the pause at the Berlin plant, sources telling us that they cut shifts anyway in Shanghai. There's a lot of focus right now, while other EV names, particularly in China, cut prices. As of April 1st, Tesla has raised prices, but I point out they said they were going to do that. And for what it's worth, I actually leased the Model Y last week.
I'm telling you people, once you have a Tesla and that's your day-to-day vehicle, his opinions are going to change. It's going to be a gradual shift to, man, these things ain't that bad, or man, these things are the best thing on the planet. I'll be very interested to hear what Ed Ludlow has to say moving forward about Tesla and the EV market.
It was an incredible deal Tesla normally does that. They really go aggressive at the end of the quarter to try and boost sales in the final days in a sprint finish.
And tell me then, did you put the order in?
I did. I picked it up last Thursday, and genuinely, I was looking for a vehicle. The leasing experience is very straightforward. I don't think that I, as one individual, will make a difference this quarter in the grand scheme of things.
Oh, but you do. You're one of many with the same mindset. You matter a great deal, Ed.
Got a few news items this week, including Tesla deliveries, and so far the commentary has generally been negative around the stock. Let's talk some Tesla first here, Paul. It seems like now the stock has kind of fallen out of favor. A lot of the analyst commentary pretty negative going into deliveries tomorrow.
Yeah, I think for the most part, it's one of the worst quarters that's expected from Tesla in quite a long period of time. There's been so many things, so many challenges, including, the Model 3 Highland upgrade in the U.S. didn't go as expected. They have slowing sales in Europe, and then the ongoing issues in China that are, EV competition coming from China, and then the pricing wars that are lingering. Just a lot of different issues happening there. So I think people are expecting deliveries to be low. I think it's, what I'm hearing is that a lot of people think this is probably as low as it's going to get or as bad as it's going to get. And so what we're seeing is some people that are long Tesla, long EVs, long Elon Musk, they still want to be in the name. So maybe they're putting on a little bit of a hedge. And then there are other people who potentially are thinking, well, it may not be able to get worse than this, and so maybe now's a good entry point to get in. So we're seeing it from both sides.
One of the worst quarters on record for Tesla. Boy, this sounds like a lot of fear if you ask me. What is the saying? Be fearful when others are greedy and greedy when others are fearful. I myself am placing protective puts, so whatever profits I get from those protective puts, I end up dumping a majority of the proceeds back into TSLA, the stock, which I fully believe are bargain bin prices at these levels right now. But me personally, what I would really like to see is Tesla speak about the deferred revenue coming from full self-driving. If that number just magically showed up in the financials, it would obviously be a topic of conversation on the call, and more than likely vault the stock 30% by giving a value to Tesla's full self-driving and the AI opportunity that presents itself for Tesla. Maybe shedding the beta tag is a catalyst for these financials to show up on the report. All I really know is that this thing is doing the majority of my driving every time I step in the vehicle. When you're talking about TSLA, I've got to prepare for the worst. The quarter might be bleak, it might be dismal, and I need to make money on the way down. But Tesla, the company? Oh, things are starting to look a little bit brighter as Tesla's full self-driving sheds the beta tag and will be supervised by a wide range of individuals. This will continue to fly under the radar until Tesla makes the analysts look at it on a spreadsheet. What is the true inherent value of a car that drives itself? Tesla's deferred revenue regarding FSD would be a peek through the looking glass. In conclusion, Tesla raises Model Y prices in China as well as in the United States. If you want a good barometer of what demand looks like, check out the incentives in both regions. Tesla's cutting back on incentives, demand is probably pretty decent. If they're piling them on, maybe they are trying to push these vehicles at the end of the quarter. Speaking of which, Tesla's long-awaited delivery numbers should be coming out today. Will be a sharp indicator on whether or not Tesla has the worst quarter on record. And while everyone is focusing on the deliveries and potential margin impact, Tesla's FSD beta is no longer a beta. It is FSD supervised, meaning the software is definitely not in a closed testing atmosphere. It's effectively open to the public. Anybody can test this software. It's that good now. Tesla will be able to accumulate various different corner cases throughout North America, further improving the technology. That's all I got for you today. Be easy. Peace.